Hey business warriors, welcome to the show. I do have to apologize that there is a big concrete mixer truck parked outside today, and I don't know if you're going to be able to hear it in the audio. I've waited for several hours and it hasn't moved, so we're just going to start recording. And today we are going to be talking about how to save even more taxes with your small business, and it's about basically converting your business structure to S-Corp, okay? From LLC Partnership taxation to S-Corp taxation. So let's kind of start from the beginning and let's explain how it works with an LLC. So if you're a multiple member LLC, generally you will be taxed by default, taxed as a partnership, and that's the way it works here in New Jersey. Your state might be different, you'll have to check that out. And with LLC income, it's what they call a pass-through business. So the LLC itself is not taxed, but the income passes through onto your personal tax return and is taxed at personal rates. And if the business has two members and they each have a 50% share, 50% of the profit goes to each of them and it's taxed at their personal rates on their personal tax returns. The pros of LLCs are you have limited liability, and then you can also have deductions, okay? So like any money you spend for your business that eats into your profits can be deducted, and then you don't have to pay tax on that money. For example, the rent I pay on this office here, which is a really crappy deal because, like I said, concrete mixer trucks are parked right outside. I've got to change it soon. But anyway, that money is a tax deduction, so I'm not taxed on that money. I'm only taxed on my profit. So that goes through onto my personal tax return, and then I'm taxed. But the disadvantage of the LLC structure is that you become liable for self-employment taxes. This is sometimes known as FICA taxes, and it includes Social Security, Medicare, a few things like that. There's a few different components to it, but it works out at about 15.3%. Now, when someone is an employee and they work for another company, they pay half of that. Okay, they pay 7.65% out of their salary. So that's why you see on your pay stub, there'll be like Social Security tax withheld, etc. A few little things like that, small amounts. That's basically 7.65% of your salary. And well, we just said it's 15%, right, for self-employed. That's because when you're an employee, your company, the company you work for, pays the other half of that 15.3%. So let's say your salary is $100,000 a year, and we're just using that level because it's 100, okay? So it's easy to say percentages in relation to the salary. You're going to end up paying $7,650, and your company, on top of your $100,000 salary, will pay $7,650. So it actually costs the company $107,650 to employ you, okay? It doesn't just cost them $100,000. But the problem is, when you're self-employed, there's no employee picking up the tab for that extra 7.65%. So you, or your LLC, or whatever, ends up having to pay the full 15%, okay? 15.3%. So it really can be quite a lot for self-employed people. That is where the beauty of the S-Corp comes in, okay? Now, S-Corp, we don't recommend switching to S-Corp right away, okay? Because there are a few things about S-Corp that you need to know, and the main thing is that you need to pay yourself a set salary, and then you can also pay yourself a share of profits or a dividend on your shares in the business on top of that, okay? Now, the advantage of this is the salary you pay yourself, you have to pay that 15% on, okay? Just like normal LLC or normal employee, whatever, you have to pay those FICA taxes, Social Security, etc. But the dividend that you pay yourself, you do not have to pay any of that 15%, okay? So you just pay federal and state income taxes if your state has an income tax. Some states don't. But yeah, you just pay income taxes on it. You do not have to pay the Social Security, Medicare part on the dividend part of your income. So, let's give an example. The IRS says that you have to have a reasonable income, okay? So you have to pay yourself a reasonable income. Thus, your company needs to be making a certain amount of money, all right? Because if you pay yourself, say, $10,000 a year, and then you take $50,000 as a dividend, that's not a reasonable income, okay? They'll see that as you gaming the system. If you get audited, it's gonna be very bad, and it'll increase your chances of getting audited, because they'll be like, hey, this guy's paying himself $10,000 a year, but he's getting like 50 grand in dividends. I think he's playing the system. So this is why we only really recommend this once your business starts to get a little bit bigger, okay? A reasonable income, the IRS actually doesn't have any definition of what a reasonable income is, okay? So it's kind of down to you to decide. I met with my CPA yesterday, my accountant, because we're actually thinking of changing to S-Corp. Well, not thinking of it, we are gonna do it, and we're preparing it now. We're gonna change to S-Corp as of January 2019, and we're gonna use S-Corp structure for our business next year because of the tax advantages. I asked my CPA what a reasonable income is, and she replied to me, well, you've got to look at the industry, look at other jobs in that industry, manager of a small media company, because that's what our company does, Generations Media LLC. And then you've also got to look at, does the income you're paying yourself cover your expenses, okay, your living expenses, basic living expenses like rent, electricity bills, any like childcare you pay for, your grocery shopping, all those sort of basic living expenses. If your salary that you're paying yourself covers those basic living expenses, then that should be okay. And then say extra money, like going on a luxury vacation once a year, or investing money in the stock market, saving up money to buy a house, that could come from your dividend, okay? Because that's kind of like extra, but the basic living expenses has to be covered by your income. That's what the CPA recommended in order to kind of appear that that income is reasonable. All right, so I asked her, if we earn $100,000 each a year, how much of that would we pay as an income? And she recommended 50%. So pay yourself $50,000 as an income and $50,000 as a dividend. On that $50,000 salary income, you're gonna have to pay the 15% in FICA taxes, okay? But on the dividend part, you do not have to pay that. What's 15% of 50,000? It's $7,000. So operating as an S-Corp is gonna save you roughly, and I'm kind of simplifying it here, rounding the figures and stuff, but it'll save you roughly $7,000 a year if you're taking $100,000 in income. Half of it as a fixed salary and the other half as dividends. Okay, so that's basically the S-Corp structure explained and the tax advantages of it explained. Now we'll talk about a few extra things. So first of all, there are more requirements in terms of kind of like the bureaucracy, the paperwork, etc. It's a little bit more involved. So it is recommended that your business is a little bit bigger. You do have access to an accountant that can kind of advise you on it as well. I wouldn't recommend doing it on your own. And then filing to become an S-Corp, basically I would recommend doing it at the end of the tax year for the next tax year, although you can actually wait and apply even into 2019, into the actual tax year. I think it's the first 2 months you can still apply. I'll put the exact date, which is the deadline, on screen. But yeah, you can apply later and still have it activated for that tax year. But basically what I would recommend is just doing it at the end of the year and then apply for the next year. Applying to become an S-Corp is actually a two-step process. So first of all, you need to file one form, which is this form right here. I can't remember the name, so it's going on screen, which is electing to transform your LLC to be taxed as a corporation, okay? It's still an LLC for other purposes, but for tax purposes, it becomes a corporation. Then after you've done that, you need to file this form, okay, with the IRS, and that elects to have your corporation taxed as an S-Corp, which is the one that gets the pass-through structure. If you're taxed as a C-Corp, you get double taxation. You have to pay tax on corporate profits and then tax on your personal salaries and dividends. That's not really the one you want for a small business. The one you want is S-Corp, and that's the one that gives you that ability to not pay those FICA taxes on the dividend part of your income, and it could save you a lot of money. So, guys, this is kind of an educational video. For your unique situation, I recommend that you consult with an accountant, with a CPA, and talk through it as to whether this will be beneficial for you. But just as a guide, if you're earning probably between $50,000 to $100,000 a year, that kind of range, I think you probably will save money by doing this. But I still recommend talking to a professional. If you like this video about converting your business to an S-Corp, please give it a like. If you're new, please subscribe, and we'll see you next time on the Business Shifu Show.